G'day, we're starting a training for the Tsunami Pro Trader ENTRADAS system. So once you've actually downloaded and installed your system, there is some documentation that we will send to you together with some training links and YouTube videos that you can go and view to actually see how to install and how to use the system. Okay, the first document that you'll receive is your Tsunami Pro Trader ENTRADAS terminology document. So once you've opened this document, it's a 30-page document. The first 10 pages is basically the setup of the system in your Pro Real-Time software and your Pro Real-Time platform. So 20 pages with information that will actually guide you on how to take a trade with our software. Okay, firstly you have the index, and our software is programmed and it's running on the Pro Real-Time chart system. So please check for the video links to actually install and activate the Pro Real-Time charts, and then from there, once you've launched your system, version 11 will start up and your software will basically open up. So firstly, we're just going through some basic navigation on the software. So it's very good to actually look at your software and your training simultaneously. So have your software open and the live software is running on the left hand side here. We've got the NAS 100 US Tech 100 market open on a 15-minute candle chart. For those of you that don't know what a candle is, please have a look at our Trading 101 video to explain the basic terminology. So firstly, when you've opened your software, you will actually access your Pro Real-Time charting platform, and you will go into the configure settings. This indicators will not be loaded yet. We'll go into chart settings and configure display settings for all charts. Very easy, just a couple of settings on here. So firstly, just below templates, we're going to click on charts. We're going to make sure that the amount of future in percentage is set to 27. Then right at the top, your watermark will be ticked. You can just untick the watermark. Make sure that it is not showing the watermark. And then if you start at the bottom, you will have your cursor on chart. Okay, so at the bottom here, under display, you're going to click on cursor on chart. After that setting, you'll go to your platform and you'll click on charts, and you'll make sure that display cursor details is unchecked. Okay, so this check button over here will be checked. You can just click it to uncheck it. After that, you'll go to Pro Real-Time trend lines. You're going to click on display hot zones at the top, set the value to medium, and then each and every color block you'll have to click on it and go and select the cyan color, one down and one to the right. So each and every one of these blocks, click on the color block and go and set your color to cyan. The bottom 4 color zones, also click on display hot zones and set it to medium. Once you're done with that, you can actually exit this and close this window. Your indicators will be loaded as shown on the training material. So if you scroll through this, this is the settings that we've just looked at. So under indicators, you're going to go and select the group indicators. So let me just bring this into focus over here. You'll select group indicators and you're going to click on Tsunami Pro Trader ENTRADAS and click on apply at the bottom and apply your indicator to your charts. Once you've done that, you will be able to see the software loaded as we see it now. Okay, so all this we actually explain to you step by step in this terminology document, so you can just follow that. Now when you want to duplicate a chart, so you'll see this is a 15-minute candle chart. In our software we make use of multiple time frames. So to duplicate a chart, you can just right click in the white area and it should bring up a menu for you where you can select duplicate chart. So once you're duplicating a chart, it basically duplicates exactly what you have at the moment. So you can do various things now. You can change the time frame on this chart to say 1 hour, and it will actually set the different time frame. Okay, so it's busy calculating. Now you've got a 1 hour NASDAQ chart with 200 units in place. So to actually expand your view, keep your mouse cursor on the chart and just scroll with your mouse, and you'll actually see that it expands and you get into focus. So let's just close this for now. On the template or on the terminology, you'll actually see that we pointed out extremely easy how to set it up. So once you've actually set up all your time frames on your screen, you will be able to save a profile. So you have a toolbar, which I'll bring into view just now, and you can go and save this profile under save as, and you can select any name that you want to save it as, and you can go and save the profile. So after you've saved the profile, you'll be able to access this profile that you've saved under your toolbar at the right at the top. You can go and select different profiles that you have saved, and you can basically select and change between different profiles. So if you have different screen setups, maybe a different larger screens at the office or a laptop screen for when you're traveling, you can actually set up different profiles and switch between them just by clicking on the toolbar. So this is all that we explained to you in detail on the terminology document. So what is important is from page 8 we start with the terminology and identifying system layouts. So the first area that we want to identify is the price chart. So that is everything that is displayed between the yellow lines. So the price chart, when we refer to the price chart, you know exactly what area of the software we are referring to. The second area is our instrument section. So this is where you select what you want to trade. So you will go and put in whatever instrument you want to trade. Say for instance you want to look at cryptos and you want to trade Bitcoin, you can go and select it there, and this is based on the instruments that you want to trade. Currently we are running on the NAS 100, the US Tech 100 indice. So this is also one of the preferable instruments to trade with our software. Okay, next to that you have the time frame and you have the amount of units. So as a default we normally set it to 200 units. Okay, very important, if you want to enlarge this window, do not use the side navigation buttons on here. Click on the bar and double click on the bar and it will enlarge it, and double click on it again to reduce it to the same size. Okay, so if you want to go and configure any indicator, you will click on price and on configure, and that will open up a window showing you all the indicators that is loaded on the system. For the purposes of just this exercise, I'll show you the one place that you can go and configure and how to actually configure it. So on the screen here you'll see there's some text: P trade over, PS retracement, and trade over. So this text is currently a little bit on top of each other, so what we want to go and do is go and change the scale of the possible entry instruction to 2. We press enter and we'll see hopefully the change on the screen on this side. So you can see now that the text was moved away from each other. So it's a little bit far, so let's try 1.5, and there we go. So now you can read it clearly and you can see the text on the screen everywhere. It's not written on top of each other. Okay, we close the configuration window. You can refer to your terminology manual at any time for further instructions. Okay, this is a 15-minute candle chart. On the right hand side in the price bar, we have the time to next candle. So this is the time until the next candle will open, 9 minutes and 52 seconds. Just above that, we'll find the actual live price of the indice at the moment. So the live price of the US Tech 100 at the moment is 11,378.2. So this is where you find the live price, real-time live price on the market. Okay, the second part of the software is called of your screen and your viewing area. At the top we have the price chart, and just below that we have what we call the trend confirmation stripes. They are located just below the price chart. The trend confirmation stripes is extremely important when you actually decide to take a trade. We'll touch on that subject just going down. But when we refer to the trend confirmation stripes, you will see that this is the area at the bottom. Okay, identifying the system lines. This is most probably the most important part of the training. You need to be able to identify the different lines on the screen and what they actually represent. So we'll start off firstly with what we call the ribbon. The ribbon is a channel on the charts, and they are indicated by RB1, RB2 and the CL, which is the channel line. So the channel line is a dashed line that runs inside your ribbon and sometimes outside your ribbon. You'll see now on your training material, the ribbon basically, when it goes in an upward direction, it's a blue color. When it goes in a downward direction, it's a red or pink color, depending on your screen's color setup. Okay, so the CL channel line in the middle there is quite an important part of our indicators, and we'll refer to it a little bit later. So firstly, when we talk about the ribbon, it's RB1, RB2 and your CL line. Those three together make up your ribbon. Okay, the next lines that we want to identify is our TC and T1. You'll see and notice that TC is black altogether. Doesn't, regardless if it goes up or down, the color would always be black. Our T1, however, the color changes. When it goes in an upward direction, it's blue. When it goes in a downward direction, it's actually pink. And between these two lines, we have a color zone exactly the same as our ribbon, which has a cyan or blue, light blue color zone when it goes up, or in a bear or in a bull market, or a buy market. And when it goes down in a bear or a sell market, it's got a yellow color zone. Exactly the same with TC and T1. There is a color zone between these two lines. The next two lines, which is important, currently they are a little bit small on the chart, so I'm going to try and expand the chart view area. So I'm going to go into my price bar. I'm going to click with my mouse down, and I'm going to drag the price down to be able to enlarge the candle sizes. So now we can see our M78 minor and M78 major. These are the two M78s and what we call the M78 channel in between them. So once again, the M78 channel has a color zone between it. When it's in a buy market, it will have a light blue or cyan, and when it's in a downward market, it will have a yellow color zone in between. Very important to identify the M78 channel. They are marked with a lowercase M78 and an uppercase M78. You'll also notice that there is a number with a P behind these lines. This is just to tell you that the current market price is currently 1 point away from the major M78 and 2 points away from the minor M78. So this is how many points the market is away from these lines. You'll see on the other lines, TC and T1, the market is currently 32 points away from T1 and 41 points away from our TC. Okay, moving on. So the other lines on our chart is called our edge projections. We have an edge projection at the top called edge R. The market is currently 64 points away from that edge R, and we also have an edge projection at the bottom, which is our edge S, and the market is currently 60 points away from our edge S. You'll see that the edge R at the top is marked in blue, and the edge S at the bottom is marked in red. Okay, very important. Currently, you'll see the midpoint, the mid-20, changes color. If the price is above the mid-20, it actually becomes blue and cyan. If it goes below the mid-20, it actually changes to red and yellow. So that is very important to identify certain market conditions. So what we actually see on the training material here, if your price is below your mid-20, your mid-20 will change to red and yellow, and it will give you a red, the same color as your bottom edge. If the price is above your mid-20, it will give you the same color as your top edge. So what is the significance of this mid-20 and the color? Because we're using different time frames, a 15-minute and a 1 hour and 4 hour time frame, you can easily pick up if the market is in a technical sideways. So currently, if you have a look, and I'll bring it into view just now, 1 hour time frame on the same indice, you'll see that the mid-20 is a different color, or 15 minutes is busy changing at the moment, but if we look at the 1 hour, just expand it a little bit, you'll see that currently the mid-20, just expand it a little bit, the mid-20 is blue at the moment because the price is between the mid-20 and the top edge. So you'll see now, as soon as the price dips below this mid-20, it changes to red on the 15 minutes. This indication is normally our first indication that the market is in a sideways technical. So meaning that the market is ranging sideways and that it is not a good time to trade. So generally, when you're considering to trade, you want your midpoint on your 15 and your 1 hour to be the same color to be able to confirm direction. Okay, so we actually explain it to you nicely in the terminology. The next lines that you will see only when you actually have a target. So I'll try and see if I can, we don't have a target at the moment. So as soon as your candle has a target projection, you will have two targets, a light gray one and a darker black one. So the light gray one is your closest target, and if your software indicates a target, you will always trade to your first target unless you have alignment on your hour time frame as well. So what does that mean? Say for instance we had a pink background now and we had a target to the bottom. We have our two targets, the first closest one and the second one, and on our hour we don't have a pink background and we don't have a target to the bottom. We would only trade this trade to the first target once we receive our trade confirmation triggers. We'll get to that just shortly. But this just indicates to you what the targets look like. When the market is ready to trade to the target, it will project the target and then you wait for your triggers to actually execute a trade. This is also an indication of when to get out of your trade should you wish not to take a preset take profit limit. You can basically plan to get out of your trade just before it's hit target. Okay, so once you actually have a target, you'll have two stop lines as well. You'll see it on the software. It will say stop 1, T stop 1 and T stop 2. Those are just support lines below your trade. Once the market hits those lines and you are not out of your trade yet, please exit your trade. Okay, the next section is our Pro Real trend lines. Those are the ones in the settings that we went to set to cyan. So you'll notice that you have different types of Pro Real trend lines. You have a major support, which is solid lines. You have an intermediate support, which is your dash lines, and you have a minor support, which is your dot lines. And again, your resistance lines, solid ones are major ones, minor supports are dotted, and your minor resistance is also dotted. So when you look at your software, you'll see these Pro Real trend lines all over the screen, and please pay attention. You can see the solid ones is the ones that have a big impact on the market. They can stop. Any one of these lines that you see can be a support or a resistance line. So when we're planning on trading, we are generally planning to trade in open spaces, and we'll get to that just shortly. But please pay attention to these lines that runs through your screen, the cyan lines in the background. Okay, so what we're going to do now is identify all the resistance lines. So we talked about the edge, we talked about the midpoint, our ribbon, our TC, T1 and our M78 channels. Other resistance lines and support lines that you would get on the software is our TG2, which is target 2, and our equalizer, so our EQ. You can identify them by the descriptions next to the lines. Together with all the Pro Real trend lines, all of these lines make up support and resistance lines. So if we say, please check if you have any resistance lines on your hour and 4 hours before you plan to take a trade, go and pay attention to every single line on the software. So on the screen, you'll also see that we set up a 15-minute chart, a 1-hour chart, and a 4-hour chart. We literally do our trade planning on our 15-minute chart, but we use our 1-hour and 4-hour for supplementary information, and also to check if there's any resistance lines in our planned trading direction. Okay, the background colors. You'll notice that there is quite a lot of background colors. The only colors that you need to pay attention to is our pink and green colors. All of the other colors is basically gray and yellow, and all of these areas is colors that sort of discourages you to trade. The green background color pulls your attention that a possible bull buy or a long transaction is on the charts. The pink background color tells you that there's a possible sell, short or bear transaction on the charts. So this is the most important parts. Gray background tells you please be patient, nothing's happening at the moment. So this is one of the only software packages in the world that will tell you when not to trade. So the color zones that we've identified earlier on in our ribbon, in our TC, T1 and our M78 channel is very important. You'll see now we identify them separately here. Our ribbons color zone, light blue and yellow when they go down. TC, T1 is also light blue and yellow when it comes down, and the same with the M78 channel. You'll notice currently on the screen we have 3 color zones. 2 of them are yellow and 1 of them is light blue. That is normally an indication that the market is in a sideways range and that it is a false run. So we had basically a downward movement but because we had 2 yellow color zones and 1 blue, it was just a retracement or a temporary run. What you ideally want is to have 3 color zones of the same color. That will indicate a trend. So if you look at the stage in the market, when this color zone moved from a yellow to a blue, we had a nice upwards trending market, and it was indicated by 3 blue color zones. Okay, so we're going to move down to the next section, just indicating to you all 3 color zones in the same area. Okay, our instructions on the software is very clear and very precise. You can have a look at the following. It tells you possible entry. What that means is that there is a possible entry in this market coming up. So we need to start paying attention to a possible buy or bull or long instruction. Just below that, we also see retracement with the upside arrow showing that it's a confirmation that there is a possible trade opportunity coming up. Okay, we have sell short side instructions and also buy long instructions. You'll see now after this instruction, we had a contradicting instruction at the top that said possible trade over, possible retracement coming up, and then trade over. And you can see the market now has moved down. So once you received an opposing instruction, you would have started looking at a possible sell or short instruction. So currently, that is our last instruction on the software. We don't have any other opposing instructions at the bottom. So we are currently in a technical sideways. We see a gray background color, and we are not going to do anything at the moment. So this is just an indication to show you how the market runs, possible entry, and then it gives you an opposing instruction at the top. You start preparing going down again, and that's the way the sequence runs all the time. Okay, our candle text is very important. So you'll see that we have text inside of our candles. So firstly, we look at our B, which is a breakout candle. This is normally an indication of a starting of a trend. If it's accompanied by all the other checklists on your software, you can use this as an indicator of a start to a new trend in a new direction. P inside the candle is patience. So you'll see that we had P inside of all of these candles. It doesn't matter what the color of the candle is. Once there's a P in the current candle as well. If you see a P in the candle, just leave that candle alone and don't even try to trade it. Then we have a non-aligned. It's an N with the arrow direction to show that it's a non-aligned candle. It means those candles are generally running in opposite directions of the trend, and they can indicate a new trend or a major reversal in the market or a retracement in the market. Okay. AS inside the candle indicates area of strength. Once you have AS inside your candles, you know that you are in an area of strength. So if you have a planned trade in that area or in that candle, you know that it is a strong candle and it can run to target. The next one is TC. That is a trade confirmation. So normally you get them on the breakout candles. If the candle is indeed the start of a next trend, you will have TC underneath it. But please pay attention. This doesn't mean that you start your trade. You'll still need to wait for your trade confirmation triggers before you plan to trade. Okay. Then we have our caution, danger, and caution candles. The market is extremely manipulated. That's the reason why we can actually show you on which candles it's dangerous to trade. So all the candles do not have a number. Only the caution candles will actually show the number. So you can see 8 has a C next to it, 9 has a D next to it, and 10 has a C next to it. This means 8C, 9 danger, 8C for caution, 9D for danger, and 10C for caution. So if you had a look at this run, there was a bear run or a sell run busy happening here. On candle 8C, the market started responding and changed direction. So this candle writing normally indicates that you need to be cautious or pay attention to the status and the number of the candle. Okay, so candle numbering is quite important. Have a look at it and make sure that you understand it. Okay, the stage identifier is the actual stage of the market. The stage identifier is indicated above the candle or below the candle, depending if it's a buy or a sell market. And this tells you and gives you an indication of the strength of the market at that stage. So a bear sell is a very strong sell instruction. At the moment we have only a consolidation sell instruction, which is less strong on the sell side. Okay, so it's very important to understand that if you have a trigger with a strong instruction, the chance of it hitting the target, and these are the targets that we were talking about earlier, there is actually a target on this candle, but it's not a trade confirmation yet. As you can see, there's a lot of resistance lines in between the current price and the target, so we will not even consider trading this. You have certain sell side instructions. A BRS, which is a bear sell, which is strong. Bear is a downward movement and sell is downward, so it's a strong movement. Divergence, full sell. So we'll get to this, back to the divergence part shortly. Very important market stage, and one of the biggest tricks in the stock market is a divergence market. On the buy side, we have a bull buy, divergence full buy, and it will be indicated below the candle, as you can see, consolidation buy. Okay, the next point is most probably the most important part of the training. So in your terminology document, you will find this on page 24, and this is your sell or short side triggers. So firstly, what we need is we need a possible entry or an instruction. So let's have a look at what happened a couple of candles back when we had this section. So we had a possible entry instruction showing that there's a possible instruction or a possible trade in the buy or bull side, the long area. So what we start to do is, first thing is we look at the background color, which turned green. We had a possible entry instruction, so you are literally going to go and prepare your trade. So you are going to open your trading platform, prepare your trade, and actually put all the trade parameters in there. I want to do a buy on the NAS 100. I want to put a take profit limit in there of 5 points, and you put in your stop loss, and you wait before you execute the trade. You are not going to press the button until you actually have the rest of the triggers. So let's go to the buy side trigger first, because we had a buy side opportunity over here. So firstly, we had a possible entry. The second thing that happens is we need to have two triggers to actually activate this trade. We now prepared our trade and we are ready to actually push the button. So when this candle opened, this 15-minute candle, it opened on a price of 11,399. Should we have then entered a trade with a take profit limit of 5 points, it would actually open the trade on 11,400, and 5 points later or 6 points later, depending on which broker you trade with, you have a spread as well. We recommend that your spread be lower than 2 or lower for this strategy to work. So if you would have entered your trade on 11,400, you would have exited the trade at 11,407 already, and this candle actually ran up until 11,419, which is a trade trigger The first trigger is our cyan arrow, and we need an upside down V, blue V, or an upside down blue V and an S. So once you get this, your blue upside down blue V and your S indicates that you're in the same direction as the major trend. If you were against the major trend for the day, you wouldn't have had the S as well. You would have had a cyan arrow and the blue upside down V. You can still trade it, but it's not as strong as the indicator with the S as well. So this is the first part of your trigger. You need two triggers to activate the trade. So the second trigger is your trend confirmation stripes at the bottom. You can get either of these triggers first. So either your cyan arrow, as soon as you get a cyan arrow with your upside down V and your S, it will repeat that trigger at the base of your candle. Okay, the second trigger is your trend confirmation stripes. You need them to be blue at the top and blue at the bottom. Once you receive this trigger, you are basically going to press your button to execute your trade that you've already prepared. So the first trigger is cyan arrow, upside down blue V, or upside down blue V plus an S. Your second trigger would be blue and blue. We have a second scenario where we have a blue and a cyan at the top in our bottom trend confirmation stripes. So let's just go to one of the areas that indicate this. You'll see at this area we had a blue and a cyan trend confirmation stripe at the top. So we discussed divergence markets. The divergence markets is one of the biggest tricks in the stock market. So divergence would actually tell you that the market has reached the highest point or the lowest point that it can reach. This is a trick in the stock market telling you, trying to catch you out and trying to get you into a trade. So if we look at a divergence full sell or a divergence full buy market, this is when the stock market is trying to trick you. Divergence full buy, or you have a divergence full sell, or you have a divergence consolidation buy. So what this means is the market is generally going to move in an upward direction, but it's going to do it in a different way. So you'll see the market move up in the following way. So every time that the market has hit this point, people are expecting the market to turn around. So what happens is they think the market is overbought, so they are predicting the market to go down. And if you're trading with a normal trader's mentality, you want to be in the market at the earliest point and take the most and maximum gains out of the market. So when it's a divergence full buy market, we need to be very patient and understand exactly what's happening in the market. So the market is busy going up. Everyone thinks it's actually reached a high point in the market. So what will happen is the market will indicate this by throwing out a red candle. So exactly what's happening at the point over here, we had a blue candle. It's a divergence consolidation buy. So we in divergence, the market is busy going up, and now it throws a red candle. At that stage, everyone jumps into the trade thinking they are the first to be in the trade. This will be a mere retracement. Because the software is telling us that the market is in a divergence full buy, we know that the market actually wants to go up. So when we see the cyan and blue at the bottom, we need to be cautious that our first trigger might be a false trigger, because in a divergence market you will always have a retracement before you go further up. Okay, so you'll see divergence moving up, down, up, down. If we go into the market a little bit into the history, you'll see divergence markets in action on the sell and on the buy as well. So we'll get to the sell side just now. Let's just go to a buy again. So everywhere where you see sign in blue, you know that you were part of a divergence market. So the market's going up here at the moment, and candle opens, it retraces a little bit, everyone jumps into that sell, and then the market goes further up. So divergence markets can actually trend for much longer and take the market to a whole new level of a high or a whole new level of a low. So it's very important to pay attention when you have in your trend confirmation stripes, if both of them is not blue and one is cyan, you must look out for the divergence trick of the stock market and make sure that you're not caught with that trick. Same on the short or sell side, the market would move down, a little bit of up, down, up, and every time you think it's hit a low, it will do a retracement, take people out on the stop loss, and then continue down. So this is the divergence full sell market. So this is a very nice market stage to trade, exactly because we know what the market is going to do in this market stage. Okay, moving on to the next section. So when you have these two triggers, you need to actually execute the trade. The same on the sell side. The first trigger is a yellow arrow. As soon as you have your yellow arrow, it will be repeated at the base of the candle, and you have your first trigger active, and your second trigger is a double red or red and yellow. Red and yellow would indicate that you have a divergence sell market, so please pay attention to the retracements in your divergence market and wait for the second trigger to activate your trade. Okay, so this is very important. At the bottom here it says important. Triggers is not a condition, it's a trigger. So when you switch your software on and all of a sudden you see it's in trigger and the market is ready and it's giving you a target, do not take the trade. The trigger is not a condition. It doesn't mean as long as the trigger is showing you are able to trade. You need to take the trade once the trigger activates immediately, otherwise it might not work correctly. It's calculated on a take 5-point profit system. So once you get the trigger, it's a trigger, not a condition. So pay attention to that. So this is a couple of important things. The heading in the training is important things. So pay attention to that, because normally that is what saves you from losing money. So the first thing is if our price ranges between TC and T1. This is a very big cautionary area. So if you have a look at it, our price was here between the black line and the blue line, which is TC and T1. The price is between TC and T1. So the market was going down, all of a sudden it's going up, and then it's going down again and going up again. What do we have when the price is between TC and T1? We call this a swing market, and it will create false triggers. So if your price is between that color zone, it's really easy to see. You can see the background, the candles when they're not in a color zone, the candles are nice and clear. Once they're in a color zone, they are surrounded by the color of that zone. When it's a TC and a T1, you must know that the market is currently in a swing market. When this happens on a 15-minute chart, it means the range is so short and the market is so volatile in the range that it's not a good idea to trade in this area, because the range is too short as well. Okay, when it happens on an hour chart or a 4-hour chart, it actually might mean that the range is a bit bigger and you might be able to take your triggers on your 15-minute chart. So just quickly to confirm and recap on the previous section, a couple of candles back, we had our possible entry, we had 2 triggers, background color, everything was correct, and we actually had a nice trade on that chart and on that candle. So getting back to our important stuff, swing markets. If your ribbon, so the ribbon again is that RB1 and RB2 with the actual CL on the inside. If you see that, it is important that your ribbon, if your ribbon is inside your M78 channel, you must know that you are in a swing market. Once again, have a look at what happened. The ribbon was outside here. We had a nice trending market going up, and then our ribbon entered, not the candles, the ribbon actually entered our M78 channel. So once this happened, you can start to actually have a swing market. Look at the market going down, up, down, up. So this is not a good area to try and trade in. If your ribbon is inside your M78 channel, you have a swing market. So between TC and T1 and ribbon between M78 channel, the market will be extremely volatile. So here we had both conditions. The ribbon was inside our M78 channel and the price was also between TC and T1, which made the market extremely volatile up and down. Look at the long wicks on these candles. These are not the candles that we are planning and want to trade. Okay, this is what we've explained just now. Then once you've had a big run, your edge R at the top and your edge R at the bottom, edge S at the bottom indicates the market range. Once the market goes out of this range, it is what we call euphoria. That is when people are rallied up by a big run in the market, and at a certain point it actually exceeds the market level, and you would get to a point where people are trading on pure euphoria, and you must know that the market will be able to turn around at any point once you've passed the edge R or the edge S at the bottom. Okay, the spread is just when you look at your trading platform, the difference between your buy and sell price. We just need that to be 2 or less for our entry strategy to work. And now some questions quickly on, can you take longer trades, more than 5 points in the market? Yes, you can. As soon as your 1 hour aligns with your 15 minutes, so meaning if we had a green background color over here on the 15 minutes and on the hour, and both of those, the 15 and the hour, is in an instruction and also has triggers, you can actually trade to your second target line on your 15-minute candle. So this would enable you to take more than 5 points in your trade. The last part of the terminology document is just explaining about over trading. So it is very important to have a very sound strategy when you try to trade. We have those documentations that we'll add and give you with the training, so that you can actually calculate what your strategy should be, how many points do you want to take in the market on a daily basis. And then we have a sell side and a buy side checklist that actually supports our training documentation and show you when to actually take a long and a short trade. And then trading space. Trading space is important to determine that there is nothing in your way. When you have a trigger to go and do a short or a sell transaction, make sure that you have at least 10 points available to the next, before the next resistance line. The same on the buy side. And you need to do this on your 15-minute chart as well as your 1 hour chart and your 4 hour chart. So that concludes our terminology document. I'm just going to go to the entry sell side document checklist and the buy side checklist. So this is basically the 12 steps that you would actually run through before executing a trade. So the first point would be, check the spread on your brokerage on your app. If it's 2 or less, then you can proceed. Check your background color. If it's green, you can proceed for a buy transaction. Instruction: is there a possible entry on one of the previous candles or the current candle that you're looking at? Yes, I can proceed. Check if the ribbon is between the M78 channel on the 15 minutes or 1 hours. If yes, caution. We just learned that it creates a swing market, so if it's between there, we do not want to trade. If no, we can proceed. Check if there's a P inside the candle. If yes, caution. If no, we can proceed. So all of these steps are quite clear and quite easy to follow. Check if your channel line, the CL, is inside your ribbon. If yes, proceed. The channel line is always an indication of the momentum in the market. So if the channel line is in the middle of your ribbon, it shows that you have momentum. Once the channel line moves outside or on the edge of your ribbon, you'll see that the momentum basically drops, and that is an indication that the market is not ready to run. Okay. Point number 7, check for trading space. Is there any resistance lines on your 15 minutes, 1 hours or 4 hour chart? Pro real trend lines, target lines, TCT1, your ribbon, edge, midpoint, all of those lines constitute to being resistance lines. So make sure that you don't have any one of those resistance lines in your place in front of you. Then point number 8, candle number. Is the candle number 8C, 9D or 10C? This could be 15C or 16D or 17C as well. Once there is a C or a D after your candle number, be cautious and make sure that you try to wait for a different candle number before you trade. Last 15-minute candle in an hour. Is it the last 15-minute candle in the hour? If yes, caution. So what you'll normally see, that every last 15 minutes of an hour, your hour chart would have gone to hit target already, and that would actually reduce the trading volume and the momentum in the market, and your last 15-minute candle in your hour might be the candle that retraces and not continue on the price run or the trend run. So it's very important to have a look at your last 15 minutes. So if your hour chart basically tells you that there is 15 minutes left in before the next candle opens, be cautious and try not to trade. Point number 10, market open. Stop trading 30 minutes prior to London and New York. So this is quite easy. On the PDF, you'll click on the link over here, and this will open a market clock that will show you all the active exchanges around the world. So it shows London and it shows New York Stock Exchange. These are the two markets that mostly influence the market. When these markets open, you have a very high volatility. So what we want to do, we want to prevent traders from losing money when these markets open. So on the current time zone, you can see that London opened at 9 o'clock. So just let's say anything from 8:30 to 8:50, 8:15 to 8:30, we'll stop trading on this market and start waiting for London to open. Until London has been open for about 15 to 20 minutes, then we can start trading again. The same will happen with New York Stock Exchange, which will open at 15:30 on this current time zone, and once it opens once again from 3 o'clock, we'll wait until 3:45 before we even consider trading. So this link is basically on your page, and you can just click on the link and it will take you to that clock. Okay, so once you've gone through those 10 steps and you say proceed, these are progressional steps. So they will happen very quickly and they will happen while you are busy watching the software. So your instruction will happen always and prepare you that a trade is coming in the possible area. So these things are progressional. You'll tick them as they happen, and then you'll wait for the last two steps, which is your triggers. On your buy side, you'll have your blue arrow, your cyan arrow plus a blue upside down V and upside down V and an S as your triggers, like we're seeing on the software over here. And the second part of the trigger is a double blue at the bottom, and that will give you your point of execution. The same happens on the sell side. Everything is just the yellow trigger, the yellow arrow plus the red V or the red VS, and a double red. When you have your yellow and your red, caution, divergence market, can be a false trigger, wait for retracement. Okay, so this is your entry confirmation sheets. Very straightforward, very plain and simple. The last part of the training is the strategy training. So this is very important to prevent you from over trading. So what we do with the strategy is we have two examples here for you. The one is example sheet. If you follow your strategy diligently, what will happen with your capital over 20 trading days, which is a month, and then you can go to, let's say, 3 months and see what happens with your capital. And basically we have a space here for your planning. So what it means is if you have $500 in equity, you put your $500 in equity. You can put any amount in there. Let's put $1,000 in there. How much money do you need to start to trade with? As little as possible. So what we want to do is we want to teach you how to trade successfully. So currently we've put a target in here of 10 points a day. So the NAS 100 that we have over here is currently has got a live value of 11,385. So how do you calculate the movement of an index? You take the live value 11,389 at the moment, or 83, and you multiply that by 2%, 0.02, and that gives us the average movement of this index during a day. This is moving up and down. So this tells us that the NAS will move on average today 227 points. So what we want to show you is that if you put a mere 10-point target there, you can actually make very good return on investment by daily following a 10-point take profit strategy. So let's say we start with $500, we take 10 points a day. Every single day we do the same thing. We're going to take 10 points out of the market. Day one, it tells us that we need to trade with the amount of contracts that gives us $2.3 per point in value. Should we take 10 points out of the market, we would have made a profit of $23.12. So if you go and calculate that 23.12 divided by $500, which is our equity, it gives us a profit margin of 4.6% for the day. So that means literally that you've made 4.6% on your capital for the day. So this doesn't change. You take 10 points every day. On your active sheet, you can actually go and put in your real-time value. So if you made $28 for the day, you'll put in $28 and it will go and recalculate the amount of contracts that you need to trade with on the next day to be able to follow your strategy. This is one of the biggest pitfalls of trading. People do not know when to stop trading. So we do not want to gamble. This is trading and this is your strategy and your business plan that you need to follow. The only thing this does is to actually show you, if you follow your plan, what will be the outcome after a month. So there is very little investments that you can actually do and take $500 of equity in 1 month's time to $1,100 of equity. That relates to just over 100% growth on capital for the month. If you do that diligently for, let's say, 4 months, you'll be sitting on a capital of $17,000 by merely taking 10 points out of a 230 point market a day. And this is only one indice. If you add the German index or the DAX, that will be doubled. So you're looking at close to 500 points in a day on those two indices, and you need to take out 10 successfully on a daily basis to be able to do 100% growth on capital on a monthly basis. So this is your strategy and your plan that you can follow basically every day, putting in your real-time value. If you've done a negative trade for the day, it will just recalculate your next days and give you the contract amount and contract value. If you follow the software and follow the instructions and exercise patience, you will realize and see that the system has an efficiency of more than 80%. By doing that, you will actually end up making a lot more positive trades than negative trades. You will still make negative trades, but the average will be much higher and your growth on capital will be much bigger. So that concludes our training session on Tsunami Pro Trader ENTRADAS system. We will be following up with some more in-depth detailed training on different aspects of the software and how to make it even more efficient. We hope you enjoy the software, and please give us your feedback if you have any comments on the software. Thank you for your time.